Hey guys, Crypto Sunday and a bit of a red week. Still in this sort of uncertain time, up and down after the halving. Not really a huge surprise. Sort of previous halvings, we've had a month or two of sideways action or sort of a fairly sharp drop. Got to sort of prepare for that potentially. Could easily go to sort of the mid $50,000, even low $50,000 range. So yeah, we'll have to see whether it happens. But yeah, let's have a look at some news. So the CoinShares report, we've seen another ever so slightly bigger decline from last week. 206 million in outflows. Obviously, when you look at previous inflows and even sort of back when we were talking last year, about this report, sort of reporting this area as enormous inflows, it's been dwarfed by the ETFs. So, yeah, I think you have to sort of take recent price action and inflows into account. And sort of this is a fairly small outflow to be expected. This is again obviously Grayscale, although we did see, as we'll come to, some outflow in the bigger ones. By coin, it's 192 million out of Bitcoin and 34 million outflow from Ethereum. Nothing too big, although Ethereum is on the month now, bigger outflow. Multi-assets still seeing an inflow somehow. It's just whoever he's putting into that just carries on adding to it and never wants to take profit or anything. So very interesting. Solana, very small outflow. Binance coin, people buying that. Litecoin, a bit of an inflow as well, 3 million. And then some smaller inflows to XRP, Cardano, and Polkadot. So, yeah, the smaller sort of altcoins are not seeing outflow, which is very interesting. And then just by country, again, a little bit odd, 29 million inflow into Canada. Brazil, still every week for whatever it is now, 2, 3 months. Continuous inflow every week. Outflow from Germany, Sweden, and of course the US. But yeah, nothing too much. And overall, just got to see sort of next few weeks if we start to tick up again. Looking at the more broken down version of the US ones, as I say, we saw first outflows, I think, since the beginning on Fidelity. Haven't yet seen an outflow on BlackRock, although it has had 3 days in a row of net zero. And obviously continued Grayscale. We sort of had a little bit of double figures outflow on Grayscale, and that was back to 2 days of triple figures, although only 100 and 130, 140. But yeah, start to see some more outflows, lots and lots of sort of single and double figure reds out of these. It's just profit taking and sort of maybe fear from some people that bought at the highs, I guess. But yeah, to be expected. Still an awful lot of money potentially locked out of these ETFs, ready to come in. Speaking of Grayscale, they are trying to stem the losses, it seems, in a very unusual way. People were sort of talking about whether they would lower their fees to get closer to, BlackRock and Fidelity to try and stem those outflows. And they've sort of taken the unusual approach of launching a mini Bitcoin ETF with a 0.15% fee, which is the lowest of them all. So they're allowing people to transfer some of their Bitcoin into this product without a capital gains tax issue, so it's not counted as a taxable event. They will contribute 10% of the Grayscale Bitcoin Trust assets into the mini trust, so lowering your fee. And I guess if people want to put new money into that the mini one, then yeah, they're going to get a bit of inflow and a bit of outflow, I guess. So, a bit of an unusual move. I thought they would just lower the fee of the main fund. Looks like you're probably still going to get outflows of the main fund, maybe a bit of inflows into here, and then, people with that fund have just got a small amount of their holding at 0.15% fee instead of 1.5. So it's a tenth of the fee. I guess they've done that on purpose. Franklin one is at 0.19, being the cheapest of the rest. And you're starting to get 13Fs come out. So companies with over 100 million in assets have to disclose their holdings every quarter. So this is the end of March 31st, what these managers held at the end of March 31st. And some of them have been buying the Bitcoin ETFs. Interestingly, Global Retirement Partners, retirement consulting firm with 140 billion in assets under advisement, holds shares in 7 different Bitcoin ETFs and 1 Bitcoin mining ETF. So whether they want to sort of diversify and spread their risk, seems a little bit unusual that you would go with 7. Sort of, if you went with Franklin, BlackRock, and Fidelity, you're all sort of getting the same fee and diversifying amongst sort of the biggest companies in the world. But if you start to go to 7, I think you're going up the fee scale and sort of not really diversifying into safer companies. Certainly you're sort of getting into the Bitwise and Valkyries and people like that, which are just not as big as Fidelity and BlackRock. So unusual that they would buy 7 within the same company, or whether this is individuals sort of wanting to hold the Bitwise one, for example, or the Valkyrie one, and insisting that they buy that. I don't imagine this is entirely GRP's decision, but yeah, very unusual. And the mining ETF as well, people wanting a little bit of leverage. And yeah, you're having sort of a range of other investors, wealth funds, family offices, and banks allocating a portion to various Bitcoin ETFs. Park Avenue Securities with 10 billion in assets under management. Inscription Capital, 1.3 billion. So it's you would say smaller entities, although 10 billion in assets under management is pretty big. Obviously GRP, as I say, 140 billion in AUM. So it's the start, and we'll see sort of. There's a lot more of these 13F still to come out. A lot of these will come out in mid-May, so I expect this will be a news item for the next month or so, and then look forward to the Q2 announcements in, what'll that be, August time. But the big powers that be are never happy, it seems. So yeah, the DTCC have ruled out collateral for Bitcoin-linked ETFs, basically saying, I guess, there's no intrinsic value in the assets, so you can't sort of extend loans against them or sort of use them, I would guess, in annual lines of credit and sort of derivatives and that sort of thing. They're saying it would have 100% reduction in their collateral value. So basically you can hold the ETF and do nothing with it, and that's about it. But yeah, a lot of people are sort of disagreeing with this, and there's a bit of sort of nuance to it. Sort of maybe a big headline, but there is still stuff possible. I don't see a huge problem in people being able to just buy it and hold it, like in the ETFs, in the 13Fs rather. So yeah, I didn't see this as a huge thing. You've also got other traditional finance people like Goldman Sachs have begun re-entering the crypto market, driven by renewed interest. So yeah, I'm sure some of this will get changed, and it just needs to become more mature as an industry. You got a lot of people sort of wondering what will be the next spark to reignite the bull market. I would, say it's still quite ignited. It's just short-term hesitation and a bit of profit taking, and post-halving sort of blues from everyone. I think you got to zoom out, but yeah, certainly something that could be a bit of a catalyst is the US Treasuries refunding announcement. So how much debt they're going to issue basically, and what they want their balance sheet to be as a target. They're predicting that the second quarter borrowing will be about 202 billion, and the cash balance maintained at 750 billion. First quarter they borrowed a net borrowing of 760 billion, so this pushes bond prices down and yields up, and that makes sort of people more risk averse. Basically, if you can get high yield on treasuries, then yeah, people will want sort of to take less risk, basically. So if they're issuing 202 billion in marketable debt instead of 760, then you have less pressure on bonds, basically, and yields potentially might not go so high. Obviously, these are huge numbers. I wouldn't sort of normally see this as a particularly big catalyst, but people are thinking this will sort of kick off risk assets as a whole, so stocks and everything, and sort of thinking crypto would follow that as the high beta version. We're not really, it seems, getting the sort of risk off, gold-like properties of crypto just yet, but I would say it still seems relatively uncorrelated. But yeah, there sort of was a few comments from Arthur Hayes, former sort of CEO of BitMEX. He's now sort of running Maelstrom, a sort of investment company, and yeah, he's sort of talking about the draining the TGA balance, potentially if they want to sort of inject some liquidity, or issuing more short-term treasuries rather than sort of long-term. So yields on the longer-term ones could come down, or unlocking liquidity through the reverse repo, because that has been sort of draining down quite a bit. Yeah, all of this could sort of lead to an re-acceleration of the crypto bull market. So yeah, I do sort of wonder about this. Obviously, stocks and crypto, it seems, are linked to global liquidity and certainly US liquidity, but we'll have to see if Janet can have that much of an effect. With unusual sort of price action on Ethereum at the moment, it's outperforming despite sort of a consistent lack of burning. Certainly this last 7 days, it's been nothing but up. Even the last sort of fortnight, showed last week, it's been nothing but up after even a fairly sort of flat period. So you have to look on the longer term to sort of see that, yeah, it's not horrendous. It has sort of ticked up on the longer term, but I sort of keep reporting that, you know, it's done this before, and it's sort of had slight up periods before, and then sort of gone on a massive run downwards. But yeah, certainly recently it's looking on the uptrend. People not using it quite as much. People using layer 2s, I guess, and sort of less burning. Whether that's obviously their long-term plan to scale Ethereum. People aren't always going to be using the main chain, but yeah, it seems to have done sort of reasonably well for the price. I sort of, since the last week, it's up from 0.0485 to just touching 0.05952. So yeah, it's back up to a sort of reasonably high range that it's been at. Looking at the sort of the big wedge pattern that I've sort of had constantly on, it's nowhere near the wedge. I think we probably have to forget about this wedge now and sort of look at just where it is today, whether it's sort of going to get back, up towards these levels or sort of outperform from here, rather than thinking whether it should be in this wedge and then sort of break upwards. But yeah, it's certainly in the last week, it's been looking pretty good. So coins for the week, as expected, is sort of pretty much all down, being about 18,000 down. Bitcoin is down about 3%. Solana down 6%. That's sort of very, very volatile at the moment. Ethereum is the only gainer, as I say, been sort of doing pretty well, up 3.2%. Chainlink down 5. Cardano down 7. Not heard sort of anything from them recently. XRP down 3%. Gala down 7%. Power Ledger flat, interestingly. Internet Computer down 12%. That's the worst performer of the week, although it's been sort of holding up really well the last month. Polygon is flat. Audius down 5%. Quant down 3%. Basic Attention Token down 3%. And VeChain down 5%. So still up and down. Have to see what is this next catalyst, assuming it does happen. Still could be sort of a few weeks away, maybe a couple of months away. But yeah, keep holding on and stay patient, I think. So leave your thoughts in comments below and like and subscribe. See you soon.